program.
What you talking about?
The program. The program. Get with the program.
Everybody clap to this. Say what?
Get with the program.
It starts now.
Hello and welcome to Get With The Program Radio Show. I'm your host, Gary Jones. Now, Get With The Program Radio Show is a multicultural, informative, relevant, and entertaining 1-hour weekly show offering you a combination of diverse interviews with questions and comments. And as always, we will act as a positive source of information. Now listen, if you want to be a guest on the show, all you got to do is log into www.getwiththeprogram.biz. Shoot me an email, leave me a message. You never know, you may have a conversation that we would love to talk about. Or give me a call at 919-665-1118. Or hit me on the hip, 919-255-2757. Now listen, today we're going to be joining the conversation with Kristi Chavous. How about that? Kristi is the president at TAXLADY Network, LLC since September 2017. Now, prior to a formal registration of business, she started doing taxes from her home for friends and family for about 5 years prior. Now, graduate of Shaw University in Public Administration with a Bachelor of Arts. She continued her education for the purpose of being a CPA. Now, a proud mother of 3 daughters and a native New Yorker, being raised in New Jersey and moved to North Carolina in 1989. Now, we done made her one of us. Hello, Kristi. Welcome to the show.
Hello, Mr. Jones. How are you?
I'm good. How about yourself?
I'm great.
That's a good thing. That's a good thing. You know, Kristi, it's a pleasure to have you here, being able to get you on the show. And, we're going to talk today pretty much about the pros and cons, taxes, the pros and cons, because, you kind of got all that stuff locked down.
I don't know if I have it locked down, but I'm sure I can answer some questions concerning the pros and cons. Yeah, thank you for having me.
Absolutely.
Too. Let me say that. It's an honor and a privilege.
Absolutely. Now, in the beginning of the intro to my listeners, I mentioned the word tax lady. So now, just the word tax lady let you know right there that we're going to be talking about taxes. And taxes is a way of life. It's a part of life, so don't take it lightly. So we're going to jump right in this, Kristi. So, Kristi, you specialize in quite a few things. I noticed you specialize in several things, small businesses, in accounting and taxation, things of that nature. Small businesses, when you're talking about taxes, is that a big thing?
Well, it's very important because it's important on how you establish yourself and start out. Taxes are a big part of that. You want to start that out correctly. You want to start that out with the right entity type, because that also dictates the type of taxes that you'll be responsible for or held accountable for with the IRS and state and local tax as well. So, yes, taxes are very important when you start out.
Now, I noticed, Kristi, when it comes to some of the African-American community, a lot of businesses open up and for some reason they shut down 3 or 4 years. And I know some businesses that I have friends with, and they tend to shut down because of not taxes, not knowing how to do the taxes, not hiring the right tax person. Is that because some of us are illiterate to knowing how to do taxes or bring it or wanting to pay a tax person?
Well, I think it's a combination of that. So often when you start out, you kind of start out happenstance. So even if you plan it, a lot of times it'll take off faster than you had anticipated. So what you need to do at that time, what I would say is when the business is a thought, that's when you need to speak to someone, because as soon as you start earning money, it's taxable. So you want to make sure that you're set up correctly, because let me tell you something. When you have been operating and you haven't been paying taxes or keeping up with it, what happens is the tax debt alone will cause a problem. But what will happen, not only the taxes that you owe, but the penalties and interest will bury you. That's what'll close the doors most of the time. You can make arrangements to pay just the taxes that you owe. You can catch it. But I think the biggest problem is we wait too long. Like we might be operating for 2 or 3 years, and then once it's known, once you start filing taxes, maybe 3 or 4 years later, then you owe so much, it can be overwhelming. Now, there are resolutions for that. I work with clients, who owe a lot. There is resolutions. There are things that you can do. Believe it or not, the IRS even has a lot of programs that they will waive out certain penalties and interest to make it easier for you to pay back. But I do say this, especially with North Carolina, because that's where we are. With North Carolina, you really don't want to play with them because they have so many taxes that they'll assess from you not paying. It could be overwhelming for you. And so often that's what'll close the door.
Wow. Now, when it comes to a small business, because we have the mom and pop businesses. When we have a mom and pop business, they start off, they go ahead and register, get the LLC, and get all the forms in place. But they don't do taxes for 3 or 4 years.
Right.
But they're running. So therefore, for them to be running for 3 or 4 years, obviously some income is coming from somewhere. So how can that be traced? I mean, how is that traced? Does the government go back and look at how long you've been in business and just calculate something?
No. Typically what will happen once you've been in business for a while and you have some good revenue coming in, what will happen is you want to get loans or you might have investors, and that's when the tax return comes into play. For example, right now, I have people calling me that have not filed taxes 5 or 6 years. You know why they calling me? Stimulus. You know why businesses are calling? PPP, SBA loans. You can't get those if you haven't filed taxes because that's the information that you have to use that makes you qualify for the loan. So all of a sudden, you got all of these people that have been working under the table. Now they want to, take advantage of this time with those loans, and you got to go back and file them. Wow. And so that's when the red flag begins. Or let's just say you have a business and you got, say, a salon or a barbershop, something like, I'm not picking on them. I'm just using that as an example because it could be any kind of business, honestly, and it takes off. It could be a restaurant and it just takes off. So now your life is getting better. You want to purchase things. You want to purchase a house. Hello. First thing the lender's going to say is, let me see those tax returns. So that's what is usually the trigger that alerts the IRS.
So I heard you say about the PPP loans. I think that's what a lot of that is going on now. I hear that's going on now.
I'm swamped. But go ahead.
So what is the backlash from that? Because I hear people they have businesses. I know some people that have businesses that hasn't been operating properly per se, and filed and got that money. I mean, what's the backlash to that?
Well, they can. It's still available. We can file all the tax returns at one time. The backlash is they're probably going to owe. They may not owe. And a lot of times, this is typically what I see, Mr. Jones. When people come to me and they have not filed tax returns, is not because it's fear. And it's usually if they owed 1 year, then they're nervous about filing. They'll say, I'm going to wait. Because they're nervous about filing because they think they're going to owe the subsequent years. But as a business, this is what I love about being an entrepreneur. Do you know you have leverage? Do you know that you can set up your business the way you want to, where the advantage is in your favor? Let me say this, despite everything going on in this country, we see a lot of different things, a lot of issues, financial, social, but this is the best country in the sense, do you realize that the tax system is an honor system? That we give you refunds based upon what's been filed electronically without even any proof yet. So what I mean by that is the best system. I'm saying in the sense that you get to meet with someone like myself or another accountant that files taxes for business, and we can help you navigate. We're not going to say you're not going to pay any tax, but we can set you up where we can minimize it. Their tax returns, sometimes I'll get into them. People or a client will tell me one thing, I'll get into and I see that they're going to owe. And then other things will come to me. Well, let me see your mileage logs. Have you been calculating your mileage? Well, it's a lot of things that I'll do that will help you. I'll actually work with you to get it done. I've done mileage logs for you. Look, tell me the clients you went to see. As for example, a realtor, they showing houses all day long, but do most of them keep up with their mileage? Nope.
Wow.
Do you know mileage is a 50 for this year for 2020 is 0.575 deduction on every mile for business.
That's amazing. Wow. So what I'm hearing is, as a matter of fact, before I go any further, how can someone get in contact with you?
Oh, I can give you my number. You can reach me two ways. You can reach me on the office number, which is 919-719-3939. That's 919-719-3939. Or you can call me on my mobile, 910-583-6005. You know, when I started doing taxes, I wasn't doing individual taxes, just to be doing them. I started them because I saw so many times with friends and family, what would happen to them is that they would be taken advantage of. They would be paying fines and penalties that if they had just done their tax returns differently or were aware of the deductions, they wouldn't have owed.
Wow. See, that's the good thing about being aware. See, that's where you come in as a professional. What we're going to do here, Chris, we're going to take a break. And when we come back, we'll have more conversation. Particularly, I want to know strong capital versus strong credit.
Oh, wonderful.
I want to find out about that. Listen,
Okay.
You're listening to Get With The Program Radio Show. Listen, I'm Gary Jones. Don't touch that dial. We're going to be right back after this. Hello and welcome back to Get With The Program Radio Show. Again, I'm your host, Gary Jones. Now, today we're joining conversation with Kristi Chavous, and we're having a wonderful conversation. And Kristi is a tax lady now. She does taxes. Now, taxes is a very important part of your life. You ain't gonna get a raise. You're just not gonna get around not doing taxes. Taxes have been going on for years. Hello, Kristi. Welcome back to the show.
Thank you. Hello.
Absolutely. Kristi, you know what? I just said something that was amusing to me. Taxes been going on for a long time. When did that start? Do you know how long that's been going on?
I do not know how long, but as long as we probably had a government, we've had taxes, because taxes is how government is paid.
Right. And I know I was going to ask you the question about strong capital versus strong credit, but let me ask you this before I get to that. I can remember when we used to file taxes, and there was times when you would get a refund back, $3,000, $4,000, when I was in college. But now when I do taxes, or when we do taxes, we're owing now.
Yes.
What has changed with that?
Well, let me answer it this way. Are you making the same as when you was in college?
No, but the cost of living has changed. Everything has gone up. No.
Yeah. But your pay has too.
Yeah, pay has gone up.
That's
yeah.
why.
So what I'm hearing, the more money you make, the less money you're going to get back.
Well, yes. When you're a business owner, how it works, first of all, you're not usually paying into taxes on a regular basis as when you're an employee. It's payroll deducted for you. That's another reason. When you're self-employed, unless you have put that in place where you pay quarterly or you're paying yourself payroll taxes, that's why you're not getting a refund. So in business, we don't look for refunds. We just look for not owing. So see, it's a mind change, a mindset, because you have more money at your discretion. See, when you work for someone, they say, this is your salary and the tax is on that. You can't negotiate the tax. You can't say, well, don't hold it back. Don't do it. You have no option. But when you work for yourself, you have a lot of leverage. So you can set yourself up how you want to. You literally can do how you want to be taxed. You get to choose. You didn't have that a choice when you're an employee. That's why I say being self-employed is beautiful, because you get to control how you want to pay. Now, you are going to pay because you have payroll tax, and that's just on the federal level, but you do have state, depending on what type of industry you're in. So the state, you have sales and use, withholding, food and beverage. So there's many taxes that come with that, not just income tax.
Oh, wow.
You have self-employment tax, which is technically just your portion of Social Security and Medicare. When you work for someone, they pay half of it. When you work for yourself, you pay all of it.
Wow, that's some good information. See, that's why it's good to have someone like you in somebody's life, because a good tax person and a good CPA, that's very important when you're dealing with dollars and cents. Strong capital versus strong credit. What are we talking about?
Money versus a good credit.
Okay.
So it's just how you fund your business. You can fund your business if you have a lot of money saved up in reserve. You have some assets that you can liquidate. You can start your business that way. Or you may not be able to have all of that. But if you have good credit, you don't need a dime. You could go right to the bank and they'll give it to you if your credit is strong. So that's what that's what I mean about leverage with a business. There are a myriad of ways to start a business. When I started a Tax Lady Network, when I was working for a CPA in the town that I was living in at that time, and when I knew that it was time to go out on my own, I didn't have $500. I had 2 clients that trusted me. And from there, I built. Because a business, you have to build. You don't just speedily go to it. You have to build a business. And so I built a business with $500, leveraging credit, and 2 clients. And they wasn't paying me $10,000 a month.
Wow. So what I'm hearing, a lot of times it don't necessarily take a whole lot of money to start a business. It's just having know-how and have the right people in place.
Exactly.
Interesting. Now, when someone wants to start up a business, I know a lot of my listeners have ideas and want to start up businesses. What are the steps? What do we do first? Because people say, do we get the tax ID number? Do we get the corporation number? How do we start? How do we start?
First of all, I don't recommend that you register anything yet until you start making some money. Because when you open for business, that's when you make $1, that's when you're technically open. Now, people can register years in advance and reserve names and do all of that stuff. And I'm not against it, but I would prefer you wait and let's see if this business is viable, because it might just be a hobby.
Right. So what I'm hearing, make sure that this is something that you are in it to win it, that you're going to do it, not just register before you even start.
Exactly.
Because a lot of people, I find a lot of people, they say, hey, I want to start a business, and they go ahead and register. They haven't made $1 yet.
Right.
Don't have a client. So once you register this business, what I'm hearing is that the government, you get an ENI number, you register, the government already is looking at you to be paying taxes.
Kinda, yeah.
They're kind of watching you.
They're kind of watching because that EIN number is out there. And there's nothing wrong with doing it that way, but it's just, I don't want you to get into any kind of cost or expectation that your business might not be ready for. Because once you register, if you register as an LLC, it really doesn't matter. You're going to have to start paying the state every year that annual fee. So I don't want you to get into any kind of fees. I don't want you to get over. See, for me, it was a little different because I was doing taxes on my own before I even registered my business, about 5 years, testing it out. And even at that time, my sole purpose was to help them. That's how I actually started. 'Cause I said, let me see that.
Okay.
People because I used to do my own. So I said, well, let me just look at it. I was always good at paperwork, went to college, all of that stuff. Knew a little bit just to be a little dangerous.
Right.
Just a little dangerous. But what pulled me in it is because I wanted to help people.
Understand.
And so what I would do, some of the clients, like I have a client now that I had with her from the beginning. And the reason why she will pay any price, she'll do whatever I say, she's brought me clients, is because I knocked down a major debt for her with the North Carolina Department of Revenue. I actually went down there on her behalf and argued her case for her.
Wow.
So that's how, that was my motivation. So check your motivations too. Make sure that they are in alignment. I'm not saying there's not anything wrong with making money, but just make sure you have a check on it. You know what I'm saying? Because you don't want money to be the driving force for the whole part.
Right.
You still kind of want to have a motivation to help or to assist. The way I like to think of it is money with a mission.
Right. Okay.
God's not obligated to prosper your business or make you the biggest guy in town if you don't have something attached to it where you're going to help someone else.
Right. Absolutely. Now, when I look at a tax stub, when I get your pay and you get your pay stub, people always ask me this question: who in the hell is FICA? They
don't even use that anymore.
I know that used to be something, FICA. You see this? I'm glad. I used to wonder who was FICA. I thought FICA was a little man or something that was. I never knew what FICA. What was FICA? What was that?
I forgot what but it was basically federal income, and I forgot what they used to call it then. But now they actually break it up. They don't call it FICA now. They actually just break it up. It's federal income tax withholding, it's Social Security, and Medicare.
Right.
Those 3. That's federal tax that, let me say it this way, that the employee pays. Now the employer pays something different because they have FUTA which is federal unemployment tax. That's why when everything occurred with the pandemic, the federal government said we can supplement. Because you wonder, like, where did that come from? How could they supplement? Because of FUTA. You pay that all the time. But when a person goes and draws unemployment, they draw it from the state. But the federal does have a fund, and it's FUTA. That's what employers pay. So you never see it on your stub because you don't never pay it.
What we're going to do, we're going to take another break here. And we're having a wonderful conversation today with Miss Kristi Chavous. Make sure I get that right. Chavous.
The S is silent.
Chavous, that's right. And we're having a wonderful conversation. When we come back, I had some people that wanted me to ask this question about withholding taxes. What numbers should they put down there with deductions and things of that nature? Because people say they want to get more money back at the end of the year and all this type of stuff. Listen, we're going to take a break right here. Listen, I'm going to reach out to my good friend, Steve Rao. Steve Rao, what's going on in your world?
Well, Gary, today I want to talk about extremism on political parties. Our political discourse in America has been really led by the left wing of the Democratic Party and the right wing of the Republican Party. But in our own state of North Carolina, we've made national news. In the midst of racial turmoil, George Floyd, Andrew Brown, and the fact that Black Americans have come to this country, their ancestors came on slave ships, shackled in chains, the North Carolina House of Republicans still has approved a plan to prohibit public schools from embracing certain ideas that examine how race and racism influence American politics, culture, and law. The bill that they've proposed, which is called the North Carolina Racial Indoctrination Act, basically says that you can't teach that this country had racism and that it's not right for the culture. The proponents say we have to treat all people equal. But Gary, I believe that this is not right for North Carolina or any state. If we're going to have a conversation about race, we need to have it in our classrooms to teach the children of our nation what America has been and what America can be. A nation of equality for all, and that we can honor the creed of our Constitution, that we're all created equal. We'll see what happens with this law, Gary. The governor of North Carolina is expected to veto it, but it's made national news, and I believe it's wrong to hide from the fact that racism exists. We need to understand that it does and have a conversation of how we eliminate bias from our nation.
Once again, thank you so much, Steve Rao. My political commentary, Steve Rao. Listen, we're going to take a break here. Don't touch that dial. We're going to be right back after this. Hello and welcome back to Get With The Program Radio Show. Again, I'm your host, Gary Jones. Now today we're joining the conversation with Kristi Chavous. Kristi Chavous, and she is a tax lady, y'all. She knows her business now. Kristi is the president of TAXLADY Network LLC now since September 2017. Now, prior to formal registration of business, she started doing taxes from her home for friends and family, and for about 5 years prior. Now, graduate of Shaw University in Public Administration with a Bachelor of Arts. Now, she continued her education for the purpose of being a CPA. A proud mother of 3 daughters and a native New Yorker, being raised in New Jersey, and moved to North Carolina in December 1989. And today our topic is taxes, the pros and cons. We're just having a wonderful conversation. Welcome back, Kristi.
Thank you.
Now, before we took the break, I was talking about that withholding and deduction thing, because you see this thing about how many you want to claim, how many allowances. Please enlighten me on that, how that whole thing works.
Well, first of all, let me say this. I just remembered something when you were saying that. The IRS, as well as North Carolina, have completely changed that system. So now I understand, too, why people are asking. I just remembered. Okay, once upon a time, you could put down you had 5 kids, or you could put 5 dependents, and that would minimize how much tax was taken out, if any. But the only tax it does not impact is Social Security and Medicare. That's coming at the same rate regardless. You could put 25 down. It doesn't matter. Now, what happened is the IRS and the state got smart. And they decided we need more money. So they came up with allowances. And allowances is really based upon, you really have to know your tax situation to do that. And they have all of these 25-page worksheets attached to it. Typical today, you work for someone, they're going to give you the NC4 and the W4 form to fill out. Both of them, one time needs to be 1 page. Now they're like 4 pages.
Wow.
And the reason is they're having you doing all of these calculations based on your tax history. So for allowances, I would say I would put zero. I would put zero because allowances are not dependents. Dependents have been taken off in the sense you used to get an exemption for a person. You don't get that anymore. That's gone. That was the reason why the standard deduction was raised. It doubled, actually. One time it was $6,000 for an individual, $12,000 married, filing joint. Now it's twice that. And that's because they eliminated the dependent exemption. So to make it simpler, don't go through all of those worksheets because it's just going to make you frustrated. Put zero, especially on North Carolina tax. Put
Wow.
zero.
Now, when these law changes, because I'm curious to know, this is just my curiosity now. Law changes like that, where do we find this information? Is that something that just CPAs and tax people know?
Pretty
because
much.
we don't. That's what I want to. Because we don't. You said pretty much. Because we don't know. I don't know about those changes. That, a lot of times I guess that happened with the company. The company know because they have a tax person.
Exactly.
So all that, and we just noticed we're gonna put the 0 to 1, but there's some other stuff going on that we don't know about.
Right. And remember also, people used to kind of, I don't want to say defraud the system, but I'm just going to say get a little zealous. Let's just say that. For example, I knew people like they knew they was going to get a big bonus. So what they would do is put down 10 dependents. And then some, because they wanted as much of the bonus that they could receive without being taxed. I understood the motivation behind it, but this is what would happen. They would forget to change it back.
Ooh,
So what do you think happened?
get caught.
They're owe.
Right.
And now they're in my office upset. What do you mean I owe? So I just take them to the W-2. Look how much you made the year before. Look how much was taken out. They say, Look how much you made now. Look how much was taken. Well, why that happen? I didn't do nothing. Well, let me ask you. Did you ever change it in the year? Oh, yeah, I remember we was going to get a bonus.
Right. See.
Bingo.
Right.
That's why. And so also, like I said, they got smart. And they said, we're not going to allow people to do that anymore. So you can't change it. And people still don't know that. Like I have a client, Mother's Day and Valentine's Day is her big seasons. Money, woo, she's off the chain. So she asked me, can you do it without taxes taken out? So you see what I'm saying? It's like that information hasn't caught up to the general public. You can't do it anymore.
Wow.
You can't put 25 down.
That's
I think the
amazing.
max is actually 3 or 4 for the federal. But again, you're supposed to do calculations based on your history. So
Wow. So they pretty much they're watching. I guess some people say that is the IRS really watching them? Are they watching things of that nature? Because now, when it comes to dependents, I remember people would carry other people's children as a dependent. Once upon a time, people would say, "You can carry my child or my daughter this year," and then if that's going on, and all of a sudden it changes. And people are getting caught now. These
Yes,
red
they
flags
are.
are coming up.
Yes.
I've seen people falsify Social Security numbers. This stuff is happening.
it is.
So when it comes to the dependents, is it safe to carry somebody else that's not yours?
I wouldn't. First of all, it's not right to do. You're not supposed to do that because there's a criteria that comes with claiming a dependent. Are they in your household? They call it due diligence for the preparer. That the questions we're supposed to ask and then give our comments back on the tax return. So don't do that. Listen, I understand that people want money, need money. You see your girlfriend down the street, she has children, she's single, and she get about 5 or 7,000. But you have to think about it. How much did she make that year? She probably needs it. Now you making $50,000, $60,000 a year. You don't need to claim other people's children so you could get more. The system was created to do kind of what we call to kind of balance the wealth and the people who earn less. It was created to help. It wasn't created for people to turn around and do it for their sole benefit, to fraud the IRS or the state. No, just don't do it. If you don't take care, now if the children live in your house and your friend live in your house, that's different because then you probably pass the household test. But don't do it. It's not, and at the end of the day, it's not worth it because when they catch you, you have to pay all of that
You're in
back.
trouble.
You have to pay penalty, you have to pay interest, and then you can't even claim that credit in subsequent years if you are entitled to it. So just don't get into
it's
this
best
thing.
not even getting caught up in
Don't
that.
even do it. If you need money, just get a job.
We're getting close to a break, and we may not finish this question all the way, but business taxes versus personal taxes, the tax brackets. I hear a lot of that going on even now. I got to get some clarification on that, and maybe you can help me out with that.
Okay, certainly.
Don't touch the dial. You listen to Get With The Program Radio Show. I'm your host, Gary Jones. Now we're going to reach out to Ursula Camille and see what's going on in her world. Ursula, what's going on in your world?
Good day, Gary. Here's a highlight in Black history. Dr. Jane Cook Wright, also known as Jane Jones or Mrs. Jane Jones, was born on November 20th, 1919 in Manhattan, New York. She was an African-American cancer researcher and surgeon, known for her contributions to chemotherapy. She developed the technique of using human tissue culture to test the effects of potential drugs on cancer cells. She also pioneered the use of the drug methotrexate to treat breast cancer and skin cancer. In 1945, she earned her medical degree with honors from New York Medical College. She was successful developing a chemotherapy protocol that increased skin cancer patient lifespans up to 10 years. She also developed a non-surgical method using a catheter system to deliver potent drugs to tumors located deep within the body, such as the liver and spleen. In 1964, she was the only woman among 7 physicians who helped to found the American Society of Clinical Oncology. Dr. Jane Cook Wright died February 19, 2013. Here's one of her quotes. "There's lots of fun in exploring the unknown. There's no greater thrill than in having an experiment turn out in such a way that you make a positive contribution." This concludes today's highlight in Black history.
Okay, now I want to reach out to Kathy Greggs. Kathy Greggs, Fayetteville Pack. What's going on? What's going on in your world?
Gary, let me tell you, we got a situation. We got an HB 805 that's trying to come in legislative to tell us we cannot protest peacefully and we will get arrested on felony charges if they think that we are igniting a riot. That is what's going on, and that is horrible. For us not to be able to exercise our First Amendment right, we must stop this mess in North Carolina, Gary. We must stop.
Are you telling me that they're telling us that we cannot march? There's a difference between a march and a riot, right? Get me on that. There's a difference, right?
But the thing is, with this specific bill, they don't really say the definition of a riot, because you could be standing by a crowd and they might say that you are failure to disperse of the crowd, even though you're not a part of the crowd, which can mean you can initiate a riot, depending on how they will write that citation up, Gary. So you could just be standing there and they could say you're a part of a group.
Wow. Now, is this just North Carolina or this is the nation?
Well, right now in certain areas of certain states, they even have it where they can drive into a crowd that is impeding traffic and won't get charged, Gary.
Wow, that's interesting. Kathy Greggs, thank you so much. Looking forward to next week. Once again, Kathy Greggs giving us that commentary. Wow, can't march, ain't that something? Listen, you listen to Get With The Program Radio Show. Don't touch that dial. We'll be right back after this. Hello and welcome back to Get With The Program Radio Show. Again, I'm your host, Gary Jones. Now today we're joining the conversation with Kristi Chavous, and we are having a wonderful conversation. We talk about taxes, people. Taxes is a big part of your life. Make no mistake, pay your taxes. Kristi, all I gotta say is thank you for being here with me today. Welcome back.
Thank you.
Hey, let me ask you a question. Since I was talking about that, and I know this is kind of off rail here. If somebody don't work, if you don't work at all, if you get up to 25 years old and you never work, how does that work? You don't pay no taxes.
No.
As long as you don't work, you pay no taxes.
Well, let me qualify that statement. Let me change it up a little bit. I just thought about that. Because income tax is based on income from all sources.
Okay.
Doesn't necessarily mean work. Could be inheritance tax.
I see. So how can somebody tax somebody that's hustling? Because I hear
I'm glad you brought that up.
I hear that a lot. Because you and I had this conversation before. Somebody on the street that's hustling or selling drugs or whatever doing.
I'm glad you brought that up.
How does that fall into the tax bracket?
When they get arrested for the drugs, they're taxed on it.
Does it get the amount of drugs they get caught with?
Yes, the value. Absolutely. That's why the code is written all income from all sources. It doesn't matter if it's drugs. It doesn't matter what it is. If it doesn't matter if it's legal, illegal, somebody left it to you. It doesn't matter. It's taxed. So many times how they even are able, if they don't have a case to stick because of drug selling or whatever, they get you on tax evasion. You didn't report it. Let me take you back. Do you remember a couple of years back, might have been more than a couple, do you remember Jesse Jackson Jr., his son? Remember he got in trouble and he went to jail. He didn't go to jail because he stole. Remember he received a gift because he was some kind of political figure. Right. And he wasn't supposed to receive it, but it was some kind of gift. It wasn't even money. It was some kind of gift that he received and they found out about it. He accepted it. Guess what got him in trouble? He didn't put it on his tax return. They used that to put him in jail and his wife. She had nothing to do with it. But you know why she went also? Because she signed the tax return.
Oh, wow. So we got to report. What about somebody's prostitutions? I mean,
all income from all sources. Now, do people do it? No. Right. But I'm just saying that's how deep.
That's deep.
It runs.
That's deep.
So you can't get. I had a client just 2 weeks ago that was asking me, and this is I'm gonna present a question to you, and I'm gonna answer it. Okay. Because people do this all the time, and it makes me crazy. What if I accept payment by cash? I'm not gonna take a check. I'm not gonna put it in my bank account. Do I still have to pay? I don't have to pay taxes on it, right? Because it's a cash transaction. All income from all sources. That's why the IRS, that's why I said it's based on an honor system. It requires you to put down how much you earned. When I do a typical tax return for business, that's an LLC, or maybe for a person who's a sole proprietor, didn't register their business at all, just started doing some business, it took off, and it'll ask you this question. Report, did they get any 1099 miscellaneous, or now it's NEC, right? So what that is when you and I said we are engaged in business, you hire me, you have a business, give me a 1099, right? So I'll put that. Of course, I'm going to report those because those are the items that you reported to the IRS. You pay a TAXLADY Network money. So IRS says, oh, TAXLADY Network made $10,000 from Get With The Program. Okay, cool. Then right after that, on the tax return, it says, now report all income that was not included on the 1099.
Wow. That's the honor system.
That's the honor system.
If you want,
and you're supposed to say, oh, well, shoot, I got about $25,000 in cash from other people that I did taxes for. The total income is about $25,000 cash.
So a cash business has some advantages if it's a cash business. Because
it does, but it's still got to be reported.
Still got to be reported. Wow. What about stuff like the lottery? You win the lottery, you pay taxes on that too?
You do, but
they take taxes out too now. But
that's the state and the federal. They'll do that too. But when you win, but the good thing is it's netted against your losses. So say I had a family member that was she was always gambling, right? So she would hit maybe $5,000 a year at the end of the year. But you know how much she paid? About $10,000 to hit. Those are the tickets and the...
Okay.
So you can net it against that.
Really?
Yeah. So keep your receipts. If you do have a win, make sure you keep your receipts prior to that where you lost, because most of the time people don't just first time in their life. Know that. Yeah.
So you're talking about keeping your lottery tickets where you didn't win. You can use that when you file your taxes.
Because you paid for them.
Ain't that something? That's money that you spent.
Right.
I would have never thought about that. Now I hear this often too, and I'm glad we're having this conversation. Having a house and other assets, does that help with taxes anyway? Because I hear people all the time, you buy a house, man, you get your house, you got a tax break, and you get married, you buy a house, you get all these wonderful tax breaks. What's up with that?
That's true. The only thing I would say is that within the last couple of years, if your mortgage interest, with your house that you purchased, for example, if your taxes that you paid, the property taxes, and your mortgage interest is not substantial, you may not get that break because a lot of the itemized deductions were removed a couple of years ago. So where I had clients when the first year they were removed that had a house, and say you pay it down where you don't have a mortgage on it anymore. Well, claiming the property tax isn't going to help you. But there are ways around it. There are some other ways. If you have a business, it can help you. If you have a home-based business, you can still use those same, your house and those deductions that you ordinarily would use on the Schedule A to itemize. So that's why I'm saying having a business gives you leverage because you can set up how you want to pay it. And you can minimize it just by talking to someone first. Most people have a little bit tax knowledge or none will come to me and say, this is what I want to do. How do I set it up? And I'll tell them.
Wow. Now, I said I'm going to ask this question so I can touch a little bit of this right here. When it comes to the tax bracket, I hear people saying that the rich people pay more taxes or less taxes, or some people say, well, why do the rich people pay a certain percentage and we pay a certain percentage and say they should be taxed more? What is this whole thing about?
Well, tax brackets is one thing because tax brackets speak to how much income you earn after your adjusted, your AGI, which you see, your adjusted gross income. So what's left over that's now considered taxable income puts you in whatever bracket. If you're in one bracket, you pay a certain percentage. Of course, the more you earn in that instance, the higher the tax bracket is.
That's how it works.
Okay, so that's brackets. That's something different. So when you're talking about rich people in the sense of, I'm going to say entrepreneurs. If you're talking about someone who has a business and what they do, taxes don't make them rich. Let me say that first. Whether they pay less or more, it depends, a case-by-case scenario, and it's other factors. They may make investments that are taxed, they have some tax deductions that are built into it, so they are more apt to hire a professional where a person who works for someone, you don't have that same advantage. In fact, when you work for someone, like I said, you can't negotiate anything. Right. That's it. It's done. Now you may have some assets or things that can assist you, but when you are an entrepreneur and you're wealthy, so to speak, you will set your business up where it's a tax advantage to you. And honestly, I think that the way the tax code is written, I'm not saying it's perfection, but I think those who are business owners or entrepreneurs that take advantage and they may pay less tax than the person working for someone because I'm taking all the risk. I'm the one taking the employees that work for me. If I shut down, they're going to go get another job. They're going to be fine. That's right. But I got all of the stuff, all of the equipment.
That's right.
Payroll tax. I'm taking all the risk.
And that's a big risk.
If it wasn't a reward in it, why would I do it?
Absolutely. Now, we're getting close to the end of the show. I want to ask you, because we're about to wrap it up. TAXLADY, that's your business. TAXLADY. She does taxes, ladies and people. She does taxes. Now, real quick, what kind of tax jobs do you do so my people would know?
All of it.
You do all of it?
All of it. Individual, business, all of it.
Wow.
Local, state, all of it.
To me, it's a specializing job.
It is. It is, because even when I finished, when I went back to school to broaden tax so that I could sit for the CPA exams, I was amazed that the accountants that were graduating, it was 2 of us that was specializing in tax. Everyone else was doing auditing for big companies.
Now, this is a crazy rhetorical question. 30 seconds on this one. Have you ever ran into a tax person that did taxes and you saw something that was not correct and right?
Yes.
Because I know you see doctors like that. A doctor may say, well, I don't know why they did that. So you have ran into that before. Wow. That's amazing. Once again, Kristi Chavous.
Got it.
Thank you so much for joining me today.
You.
I really appreciate it.
I enjoyed it.
Share some good information.
Yes.
TAXLADY. People, you heard it. And like I said before, you can reach her at 919-719-3939. You want to get your taxes done, man. There it is. Good information. African-American lady. Thank you so much. Appreciate it.
Thank you.
Once again, you listen to Get With The Program Radio Show. I'm your host, Gary Jones. As always, stay positive, keep your head up, and remember to
Get with the program.
What you talking about?
The program. The program. Get with the program.
Everybody clap to this. Say what?
Get with the program.
It starts now.